Hello, everybody, and welcome into Commodity Culture, where we break down commodities markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day. Today is May 4th, 2026, and I'm thrilled to welcome Eric Yeung to the show, who goes by King Kong 9888 on X, where he discusses geopolitical and economic effects on precious metals and commodities. In the aftermath of the US sanctioning Chinese oil refiners, China is fighting back big time. And Eric reveals why he thinks their strategy to use physical gold in response could lead not only to the end game of the sanctions, but of the dollar's reserve currency status as well. Eric also dives into why China stockpiling physical silver is a complete game changer for not only their monetary, but their energy situation as well. Why wealthy Gulf state individuals are selling their gold in bulk to Hong Kong at a discount, and so much more. So strap yourselves in for my conversation with Eric Yeung. Eric Yeung, it is great to have you back on Commodity Culture. Now, we were just speaking off camera before I hit record today, and you filled me in on a lot of very breaking information. And a large part of this was the U.S. recently sanctioning Chinese oil refineries, accusing them of importing Iranian oil, and China is fighting back. I'm going to read a quote from Al Jazeera. It says, China has announced an injunction to block U.S. sanctions placed on 5 Chinese refineries accused of buying oil from Iran. The U.S. sanctions announced by the Department of the Treasury late last month bar the refiners from the U.S. financial system and seek to penalize anyone doing business with the firms. Break down what's going on here. And you posted on X that physical gold is the only end solution. Walk us through that as well.
So Jesse, thanks for having me on again. And I just want to explain to your audience that this time the U.S. sanctions on China on the Chinese so-called teapot refineries is a little bit different than what happened in the past. That is why China is fighting back big time. And as you mentioned, there are 5 teapot refineries that the U.S. is sanctioning, Chinese refineries that the U.S. is sanctioning. The problem is this time, one of the refineries that the U.S. is sanctioning is a refinery called the Hang Li Petrochemical Thailand Limited. Now, this is not a small teapot refinery in China. It is a strategic national powerhouse in China. Okay, so what this refinery does, and it will shock your audience, is that it actually, number one, has one of the biggest shipbuilding empire in the entire world. So effectively, if the U.S. sanctions Hang Li Group, is sanctioning a significant part of China's shipbuilding abilities, open to the rest of the world. As well, this Handy group is very much interconnected within the Chinese energy infrastructure at the northeastern part of China, which, by the way, is China's industrial powerhouse traditionally. So just to give your audience some numbers, 280 billion RMB yen invested, 20 million tons per year of petroleum refining, 1.5 metric tons of ethylene, 17 million tons of PTA plus coal chemicals. And in 2025, its revenue was 201 billion RMB. For Hang Li, and for the entire group is 899 billion RMB. So, almost a trillion RMB for the entire year for last year, and around 150 billion US dollars. So as you can see, like China can't back down. That's why they are announcing that they're blocking these US sanctions. Now, I don't know if you could pull up the infographic that I did earlier today for my audience, but basically, what I see is that this will essentially put the Guangdong Bank SGE gold loop that China has used in the past to deal with Iranian sanctioned oil into hyperdrive.
So, what comes next here in terms of how this is all going to affect things on the geopolitical stage? Because it's largely been speculated that a big part of this war on Iran is about blocking China from accessing Iran's energy. This seems to confirm that theory. How do you expect this all to advance from here?
So yeah, Jesse, I mean, I have explained to my audience in the past through a Substack article that I wrote on the China-Iran oil for gold loop via Guangdong Bank and SGE. And I can go through it really quickly for your audience today. I mean, essentially, what happened in the past, and Iranian oil has always been sanctioned by the US, you got to remember that, is that China used a bank at the what we call the Uyghur autonomous region at the northeastern part of China to facilitate the oil buying transaction by Chinese oil buyers of Iranian oil. So what happens is Iranian oil sellers would sell oil to Chinese oil buyers, primarily these refineries that we just mentioned. And the Guangdong Bank at the Uyghur Autonomous Region would open an account, a current account for these Iranian entities, and the Iranian oil sellers would get paid at Guangdong Bank at that current account. So now you have Iranian entities keeping their RMB yen proceeds, their oil proceeds in China at Guangdong Bank. When these Iranian entities or the third parties want to buy Chinese goods for Iran, manufactured goods like, for example, drone components, missile components, consumer electronics, etc., they would take that RMB yen from the Guangdong Bank and they would buy that stuff, that Chinese manufactured stuff domestically in the Chinese market, and then via shadow fleet, that product would be shipped back to Iran. Now, again, like if you look at the infographic that I provided to your audience, for the surplus that RMB yen that these Iranian entities generate, they would actually take that money and go to the Shanghai Gold Exchange to buy physical gold. Now, we might not see it at the Shanghai Gold Exchange International, SGEI, because everybody wants to keep what I just talked about hush, hush, under the radar. So they would go through a third party proxy in China, open a domestic SGE account, and they would buy that gold. So that, Jesse, might actually explain why the SHFE right now has approximately 100 metric tons of physical gold sitting at its vaults. It has been going up for the last couple of years, and now it's at 100. What I'm thinking is that a lot of that gold may actually be owned by Russia and Iran oil producers, potentially.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. So in a sense, we're starting to see that gold for oil transaction become pick up more steam, because we've been hearing rumors about oil for gold and gold being used more in international trade. What you're saying is that perhaps that's ramping up at this point. Is that correct?
Correct. So what I'm saying is that what I just described has been happening for years. And now, because of the new US sanctions on these Chinese refinery, and especially on the big refinery that we just talked about, um, I think like this oil for RMB for gold is going to accelerate from this point on.
How do you see that affecting the global economy and the status of the US dollar as the world's reserve currency? We're already seeing signs that the petrodollar is under threat, as of course we've seen oil for renminbi transactions between China and Iran. Assuming what you're saying all plays out and we start to see gold used more as an instrument of trade, is that putting major pressure on the petrodollar and the US dollar's reserve currency status? And what do you think the US response would be to that?
I think the US dollar will still be a reserve currency for the Western bloc of countries. Like, I'm thinking just the European countries, Canada, Australia, etc. But increasingly, I think the BRICS countries are going to be using physical gold as a reserve and also a collateral in place of U.S. Treasury bonds, and we're seeing symptoms of that all over the place. I think what is happening with the sanctions is just another accelerator that is pushing the entire world quicker into the end game.
Now, another interesting fact that you mentioned before we hit record today is that it's suspected that wealthy Gulf individuals, people from the Gulf member states, are selling gold in bulk to Hong Kong Gold Exchange members at a discount. Walk us through that news and what it means for the gold market.
So, like this news is fresh off the press by Bloomberg. Just came out today. And basically, the chairman of the Hong Kong Gold Exchange, his name is Haywood Chung Tek Hay, said that, as you said, Jesse, they're seeing gold merchants from the Middle East, like these are individuals or companies from the Middle East, selling physical gold in Hong Kong. And by him saying it, I'm assuming that he's talking about these guys are selling bulk gold to the Hong Kong Gold Exchange members at a 15 to 20% discount to the market price. And when he says market price, I'm I'm interpreting it as spot price. So that's very interesting. But my observation is that China is probably mainland China is probably sucking up all that Middle Eastern gold that is on discount. Why do I say that? Because if you look at the Hong Kong Gold Exchange gold price, we're actually at a slight premium, like less than it's a buck or $2 US dollars, so it's less than 0.5%. Obviously, it's a fraction of a percent, but it's still slightly above the international spot price. Now, if there are more sellers than buyers, we'll see a contango of sort, which means that the Hong Kong gold price would be at a discount to the international gold price, but we're not seeing that. So that's the practical observation, or the ground zero observation that I report to your audience. In terms of what else is going on in Hong Kong, I think just not even talking about the bulk buyers from China, i.e., big government controlled entities, or maybe even the government itself in China buying this gold from Hong Kong. There's a lot of retail demand in Hong Kong for physical gold. So there's no shortage of that. I mean, like, it's not making the headlines nowadays because the FOMO, so to speak, has died down a bit. But continuously, people are buying a lot of gold, physical gold, regardless of price. So what I say to that, Bloomberg report, Jesse, is that keep it coming. We need it. Whatever you want to sell us at a discount, good for you guys. We want that discount, or at least the middleman want that discount to make more money for themselves, and they're going to pay more taxes to the Hong Kong government, enriching our treasury. Thank you.
Very interesting observations there. I
Yes.
want to switch over to silver for a moment, because China imported the most silver ever in a single month in March. Of course, we've all heard about the export restrictions they've also put on the metal, which came into effect at the start of this year. What is China's end game when it comes to the silver market, in your opinion?
So this is a very good question, and I'm going to explain it to the audience this way. China's electrical grid right now is approximately 58% dependent on thermal coal. And then the rest, you have nuclear, you have solar. I think solar makes up around 19%. And but crude oil is less than 1%. And natural gas is less than 3% of the electricity generation in China. So a lot of people may be shocked, but that is reality. I actually have a chart on my X account if people are interested. All my data are cross-checked from IEA and also the Chinese government data. So this is all legit data. And China produces domestically around 92% of its thermal coal. So basically, China's electric generation is very much domestically hinged. It's domestically generated. And as you probably know, Jesse, and your audience probably know, China's had a real big push on EVs. So China actually in 2025 successfully sold 53% of its new vehicles in the EV format. So that's impressive. I mean, last quarter, I think they pushed it up to 59%. So the last quarter of 2025 went up to 59%. And for the first quarter of 2026, although the numbers are not out yet, there are suspicions that we are in China probably selling more than 70%. And that's thanks to Donald Trump, by the way. Because even though Chinese petroleum is not the most expensive in the world, as a matter of fact, it's a lot cheaper than Hong Kong. It's a fraction of what I pay in Hong Kong. It still went up along with international oil prices. So people rushed to buy EVs. China's EVs exports in the first quarter went up 200%. All those EVs that people laughed at last year, sitting at parking lots, they're all gone. All that inventory, all sold. Thank you to Donald Trump again. He helped us to sell all these EVs. So your audience might ask, well, what's the big deal? Why is Eric talking about EVs and coal and all that? And I just want to point out that 98% of the plants in China are actually the new clean coal plants. So they don't emit all the black smoke like the ones that we see in movies. Okay, these are clean, new, high-tech coal plants. And the reason why I talk about the Chinese electric power grid and the EVs is because guess what, Jesse? All this stuff uses a lot of silver, a lot of physical silver. So silver, in my mind, well, not only in my mind, in reality, is China's backdoor to diversify away from crude oil imports. So what you just said, which is I'll give you the number, China net imported 500 metric tons of physical silver in the month of March. Essentially, Donald Trump and the West, like LBMA and the COMEX, they are giving China an additional lifeline to divert away from crude oil imports. That's my conclusion.
Well, I want to follow up on that because you also posted on X recently. How long do you think the US will allow artificially low priced physical silver to be exported to China via the LBMA, thereby empowering China to reduce its dependence on crude oil through solar power and electric vehicles, as you've just outlined here? Do you think the US administration is aware that this is going on? And is they're already attempting to cut China off from oil flows coming in through Iran, putting sanctions on them? Is their next move to try and cut China off from cheap silver as well?
Another interesting fact is that China actually shipped a whole bunch of rare earths to the US in March. I posted it on my X account. And so I thought the timing is very coincidental. That's like when China net imported that silver. So my analysis and my conclusion on that is that is it possible that the US traded silver with rare earths from China? Because the US need these rare earths to build, rebuild and build US military weapons. They need the rare earths. Like, I mean, like a lot of these rare earths are made into coatings on top of turbine blades and components within cruise missiles that can withstand high heat in a high velocity or acceleration environment, and they can't do without it. So China, I think, shipped out something several hundred tons of this stuff in March to the U.S. And at the same time, the U.S. is shipping all the silver or shipped all the silver to China, which China needs as a, like I said, crude oil alternative. So I thought that was kind of interesting, and like I made that connection, and I hope that answers your question.
Yes, I guess the only follow up I want to have is how do you think the U.S. is going to respond to this? Because you mentioned you think it's possible that they actually did a deal, rare earths for silver. How do you think the U.S. is looking at silver as a strategic asset at this point in time? Because they did add it to their critical minerals list as well. So surely they must be aware. And silver is also used in some military tech as well.
So I think if China, like that's a very good question. So I think if China, let's say, stops shipping rare earths to the U.S. After that big shipment, by the way, the it's actually I misspoke. It's actually 60 tons of vi, Vatrium, VTTRIUM oxide. Okay, so that's the technical mineral name. Anyway, so if China stops, let's say, shipping all these rare earths, or if they squeeze it to a very low level, then I think it's possible that that the U.S. stops shipping silver to China. By the way, like some of these rare earths went like the price of these rare earths, some of them went up something like 6,000%. So silver went up what, like 300%, 200%? It did go up to 120, but now we're at 70. So if I just look at the math, Jesse, it's not the art of the deal here. It's the art of the bad deal, isn't it? Like China is jacking up rare earths like a couple thousand%, selling it to the US. So which means that, by the way, if you don't need to be a mathematician to figure this out. That means, let's say, even if China ships like 1/10 the rare earths to the US, they're making the same money as before because the price per unit went up 6,000%. Whereas the US, you know, let's just believe that they have the ability to take the paper price of silver up and down. They took it up to only $70. So it's a really bad deal for the West. This means that the West, the US, LBM is still shipping artificially cheap silver to China for very little rare earths. If we follow that logic.
Yeah, and China controls the vast, vast majority of rare earths, both mining and processing. So they do have a stranglehold on those supplies as well. And just to clarify, it's yttrium oxide. And I should also note that the permanent magnets made by rare earths are also vital for missile guidance systems. Which is obviously a huge thing in modern warfare. It's much more drone and missile based. They're used in drones as well. I'm making a documentary on rare earths right now, which is why I've got all this information top of mind. Now, I want to shift a little bit to discuss gold and silver mining stocks because we've seen a bit of a disconnect, particularly when it comes to the gold miners, but silver miners as well, in terms of the performance of the miners versus the metal itself. I mean, if we take the GDX and SIL ETFs as a proxy for the gold and silver mining space, they're barely outperforming the metals year to date. I wonder what your thoughts are there. Is this presenting an opportunity at present, and how do you approach the gold and silver mining sector?
Well, Jesse, it's a very good question. I keep track of my miners from time to time. I mean, I stronghold them for a long period of time. So I don't check all the time, but I check them from time to time. And I noticed that I'm getting a lot of dividends from from the producers. So to answer your question, I think, I'm by the way, I'm rotating my dividends from these producers to quality developers that small, like obviously they're very small, the junior miners that potentially may become a developer very soon. So my answer to that is that Wall Street, they traditionally don't like miners because miners, when the underlying metal prices turn around and go down, the miners get slaughtered. That's just a fact. But in this case, given everything that we just discussed, if gold and silver prices consolidate at where they are right now, maybe they dip a bit because of some sort of a US dollar liquidity squeeze because of what's happening at the Strait of Hormuz. But let's say this consolidation finishes and they continue to go up higher. I think miners are going to do really well. So I'm holding all my miners personally.
Yeah, and here's what I don't understand. Agnico Eagle, Newmont report record earnings. They're basically printing cash at this point with the gold price where it is. And on that news, both stocks fell. I think Newmont fell 3% in a day, Agnico Eagle around the same amount. I mean, they were kind of already going down because we're seeing a strange dynamic as well when it comes to the war and Trump tweeting or posting on Truth Social is that whenever it looks like pieces on the table, gold and silver kind of start to rise along with the miners. And then when the inverse happens, oh no, the war is going to be back on. then they go ahead and drop. And now this has been a very strange environment because to see these massive gold producers, these aren't juniors, these are the best of the best, the cream of the crop, essentially printing record free cash flow, and for them to sell off in the aftermath of the news. What do you think is causing that disconnect?
Again, Jesse, I think that's just a knee-jerk reaction to the potential liquidity squeeze, U.S. dollar liquidity squeeze that may happen if the war in the Middle East escalates. So um, once the direction of Donald Trump is clear, I don't think it's clear, by the way, at this point. It's just every day he's saying some stuff that doesn't materialize. It's just all talk. But once the world knows where this is going to take us, I think then, like I said, the price of gold and silver is going to finish their consolidation phase, and at the same time, the miners are going to bottom out and resume their upward path.
And before I let you go today, I'd love to hear your thoughts on any areas outside of gold and silver and the miners where you're currently seeing opportunity. I know you've spoken on the show about uranium in the past. Any update there? And what are your thoughts on other sectors? Maybe as a bit of a follow-up to energy, would you be getting into oil and gas at these levels, or do you think some caution is warranted, given that a tweet from the president can send markets screaming one way or the other, particularly when it comes to energy?
So I don't own any oil and gas equities exactly for the reason you just mentioned. I own uranium, a lot of uranium equities because they, well, they're part of the energy complex. They get the upside benefits of oil and gas, and they don't get the downside risk of Donald Trump and Scott Bessent typing some tweet on it. So it's the best of both worlds. I know you yourself also own a lot of uranium equities, so we're in the same boat there, and they're doing really well. So that's what I own outside of gold and silver miners, as well as physical gold and silver. I also own some Chinese AI equities and Chinese um, integrated circuits manufacturers equities, but that's for like a longer play sort of hold because in my opinion, all these Chinese stocks are not really going to realize their potential in terms of monetary value until China has its financial system divorced from the US dollar system. So that will take some time, but I own some of that as well.
Well, Eric, fantastic conversation. Tell us about your Substack and anywhere else people can follow you who want to hear more of your work.
So if people want to follow my work, they can follow me on X at King Kong 9888, and it's the same handle on Substack as well.
Great. Well, I'm going to put links to both of those in the description below for people who want to check it out. Thank you once again, Eric. It's always a blast having you on the show.
Thank you, Jesse.
Thank you for joining us today. This episode is brought to you by ARC, Silver, Gold, Osmium. They have some great prices on precious metals, bullion products. They are on your screen right now. These are subject to change, and well supplies last, so reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and represent sound money in style with the Stack Silver Not Fiat t-shirt backed by a 100% quality guarantee. Use the link in the description below, and I'll see you guys on the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.